Amazon and Meta are out, so too is Microsoft. So, folks, here we go. Amazon, looking at the outlook, let's go there. See, second quarter net sales, they are kicking the numbers higher, 194 billion, to 199 billion. The estimate on the street is 189.15 billion. See, second quarter operating income of 20 to 24 billion. That is compared to the estimate of 22.86 billion. AWS net sales. This plays into the cloud for the first quarter. XFX up 28%. That beats the estimate of a rise of 25.7%. We are seeing Amazon shares, though, down about 3.8% in the after hours trade. Not seeing yet a Capex number. Operating margin, though, for the first quarter, Tim, that came in better than forecast, 13.1% versus 11.7% higher. And just looking to see if we see anything about Capex, not yet. Should we go on to Meta?
Well, I want to go Microsoft real quick, up
good.
1.6% right now in the after hours. Third quarter Azure and other cloud revenue, XFX up 39%. The estimate was for 38.2%. Third quarter cloud revenue was $54.5 billion. Third quarter revenue coming in above estimates at $82.89 billion. The estimate was for $81.46 billion. Shares of Microsoft in the after hours climbing higher, up 3%. Carol, I know you are watching Meta Platforms.
All right, so Meta right now is down about 4.2%. I'm going to go to some of the headlines. Meta sees fiscal year Capex at $125 to $145 billion.
Ooh, wow.
It had seen $115 billion to $135 billion. It also, talking about the second quarter, revenue, $58 billion to $61 billion. That compares with the street estimate of $59.56 billion. So again, that Capex number may be catching investors' attention. That stock down about 2.4% here in the aftermarket. What are we missing?
Meta sees second quarter revenue, as you mentioned, $58 billion to $61 billion. I'm just repeating these numbers, Carol, because they are redheads. Meta sees fiscal year Capex. This was huge, 125 to 145 billion. Saw 115 to 135 billion. Shares moving lower in the after hours.
One more to get to. We've got Alphabet out in the after hours as well. I'm pulling up the aftermarket trade. Stock is up about 3.8%. Let's go to some of the big headlines. The company boosting its dividend 5% to 22 cents a share. That's what the street was looking for, that 22 cent a share dividend. Gemini Enterprise, so we're talking AI here, has 40% quarter-on-quarter growth. Waymo surpassing 500,000 fully autonomous rides a week. And then let's look at the first quarter revenue, folks. That was a beat, $109.9 billion versus a street estimate of $107.1 billion. First quarter revenue ex-TAC, $94.67, big beat there. Estimate on the street, $91.57 billion. And then Capex for the first quarter, so looking backwards, $35.67 billion. Street estimate was a little bit above that, $36.39 billion. So again, we're seeing this stock also move in the after hours. As I said, we see it a little bit higher. Let me just pull it up once again for me, and it's up about 3.3%, Tim.
Yeah, let's go through all the companies. Well, some of the companies that we've heard from, as Carol mentioned, 3.3% higher for Alphabet in the after hours. Meta Platforms, a different story, down right now more than 5% in the after hours. That Capex spend certainly getting investors' attention. Amazon shares bouncing around, but down right now about 1.4% in the after hours. And Qualcomm shares sinking 4.5% in the after hours.
All right, let's get to our incredible roundtable. We've got them for the next hour as things continue to come at us. Ed Ludlow, of course, co-host of Bloomberg Tech on Bloomberg Television. He's out there in our San Francisco bureau. Also with us is our Anurag Rana, Bloomberg Intelligence Senior Technology Analyst. He's out there in Chicago. Anurag, I want to kick it off with you. Go where you want. There's a lot coming at us. You want to start with Microsoft?
Yeah. Yeah, so Microsoft did beat a little bit on the Azure growth, so 38% goes to 39, so minor inflection up. We're going to hear on the call whether they're going to use they have used GPUs internally and what kind of guidance that they give. So that's really Microsoft. But the two biggest shocker are actually Google Cloud growth and AWS growth. Both have accelerated quite a bit. That shows that their cloud strategy right now is doing slightly better than Microsoft's.
Ed Ludlow, come on in here. Again, we got a great roundtable. Ed Ludlow, Bloomberg Tech co-host. That was Anurag Rana, Bloomberg Intelligence Senior Analyst, who we just heard from. And in a minute, we're going to bring in Ron Westphal, Hyperframe Research Infrastructure and Networking VP and Practice Leader. Ed, what's on your radar?
how hard it is to follow Anurag. Is this
I gave you a little time. I gave you a little time.
Yeah, look, I go with it logical that AWS growth, Amazon Web Services is the number one position in cloud computing. 28% is the highest rate of growth for about 15 quarters. That's the severity of the performance. So going into this, I'm trying to get a common thread between Alphabet, the parent of Google, AWS, and Microsoft. We looked for the growth rates of cloud because the swing factor in the market has been capital expenditures. Investors have been willing to look at the capital expenditures, even if those numbers get bigger, but in return, they want to see outperformance in cloud computing growth driven by AI, and also they want to see some kind of forward guidance, boosted forward guidance. And so in these statements, we have the numbers on growth for cloud. We don't have a capital expenditures figure for AWS that's any different from prior guidance. Meta does have a new capital expenditures figure, and I would just suggest we go to that next.
Well, that's exactly where I want to go. $125 to $145 billion, increase from our prior range of $115 to $135 billion. As a result, we're seeing shares of Meta Platforms, Carol, down by 6.3%.
Yeah, Kurt Wagner, tech reporter on the Meta Live blog. From the release, we anticipate 2026 CapEx, including those principal payments on finance leases, to be in the range of that 125 to 145 billion. So increase from that range, just to reiterate. So that's a problem, Ed?
Well, let's just do the calculation, right? So we know that CapEx is going up. What is the outlook for growth? Revenue in the current period, second quarter, will be $58 billion to $61 billion. Consensus was $59.6 billion. That is right in line. And we went into this knowing, based on a summary of the sell side and of the buy side, that if the CapEx numbers get higher, they want to see growth also going up in terms of guidance going forward. And this second quarter guide on Meta sales, it's very in line with expectation.
I want to bring in Ron Westphal, Hyperframe Research Infrastructure and Networking VP and Practice Leader. I want to stay on what Ed was talking about, Ron, and that's Meta's CapEx estimate. We're also seeing some headlines. Headwinds in the EU and US could significantly impact results. The company sees scrutiny on youth-related issues as well. Shares of Meta Platforms right now down about 5.5%, but it does seem like more important is that CapEx number, 125 to 145 billion, increase from that prior range of 115 to 135 billion dollars. What are your thoughts?
Sure. I'd like to start with looking at it, the bigger picture. I would see Meta as certainly benefiting overall, despite the recent dip from the overall market expectations. That is the total addressable market for Meta, alongside the other of the major four that are coming out this week, is a total addressable market of up to $11 trillion. And so I think that's going to definitely enable Meta, as well as the other players, to continue with the upswing in CapEx. And yes, that's causing concern, but I think what we're looking at is, when you look at the group earnings, they're projected to grow 20% year over year, and that is outpacing the overall S&P 500 14.5% growth expectation. And so as a result, I'm anticipating that Meta will definitely be looking pretty solid over the course of the year and further out, because not only is it upping its CapEx expenditures. However, it's also, I think, benefiting from trading at a relatively conservative forward PE ratio of the lower to mid 20s, as you know, that fluctuates on a daily basis. And they're definitely benefiting from the fact that they're monetizing AI more rapidly than some of the other Mag 7, thanks, to their social platforms, certainly including Facebook as well as Instagram. And so I think that's something that will definitely be something to definitely look at as we find out what Meta is really going to do for the rest of the year.
All right. Anurag, come on back in, because I'm just going to go back to Microsoft for a moment and just take a look at what that share price is doing, because we are seeing that stock, I think it kind of leveled out. Let me just pull it up on my Bloomberg. Still down about 1.4%. As you continue to go over the numbers, the big one that we have highlighted here is the third quarter revenue, $82.89 billion. So that's a beat compared with the street estimate of about 81.5, and third quarter Azure and other cloud revenue, again, X currency up 39%. That's a slight beat or big beat, I think you can say maybe, over the estimate of 38.2%. But as you continue to go through the numbers, what's important here?
So it is the degree of beat that's most important, and that was my first remark. When you look at all three of the cloud vendors right now, the ones that showed the biggest jump was Google Cloud in terms of growth rates. Same's the case with AWS, and which is very impressive given the size of the run rate of AWS business is much higher than the other two. And then on the third side is Microsoft in terms of the growth rate, where the beat is only 100 basis points. But as I said, they may be allocating a lot of their resources to internal development, which we believe is very important for Microsoft's future. And those are the comments I think that are to be most importantly in terms of following on the conference call.
Well, Anurag, why is Google able to do this? Like, who are its customers that are spending money right now? What does it signal to you about where the spend is coming from?
I think multiple factors. And first and foremost, I do want to say Google is the smallest in terms of all of the three, which means the dollar base is low, so growth rates can be high. But second, their TPU-oriented stuff is doing very well. We all know there is a shortage of NVIDIA chips right now, so people are rushing towards deploying more workloads in Google because of their integrated infrastructure with TPUs.
You know, and I want to mention another headline from Microsoft. AI Biz annual revenue run rate up 123% year over year. Third quarter intelligent cloud revenue, $34.68 billion versus $34.32 billion. That annual revenue run rate up 123%, Anurag, impressive?
Yeah, I think this is the first time now they're disclosing this again. They stopped giving some of these numbers in the middle. So I think they are also trying to prove to the world that they are ahead of AWS because, for the longest period of time, Microsoft was the only person that was giving that number. In between, they discontinued. And just recently at the with the Amazon annual letter, they gave their numbers. So I think Microsoft is saying that even though the Azure growth rate is not as fast as people may be anticipating, they have a very, very large base of AI revenue that nobody else has.